the Jet-Setting Wealth Advisory Podcast, where your financial journey takes flight with David T.U. As an airline pilot and financial expert, David merges the aviation industry and wealth management to help you navigate today's complex financial skies. Each episode features expert insight, blending personal stories with essential financial strategies. We ask that you fasten your seatbelts and sit back as we prepare for takeoff. Our destination, your financial empowerment.
Hello, everybody. Welcome to the Jet Setting Wealth Advisory Podcast. I'm your host, David T.U. And today we are absolutely happy, ecstatic that Michael Reeder, CPA and managing partner of the Reeder CPA Group. Michael is a trusted advisor with small businesses and entrepreneurs specializing in strategic tax planning, accounting, and business development. His expertise spans in entity setup, funding strategies, tax optimization, and financial projections, critical components for business owners seeking long-term success. Michael holds a Bachelor of Science in Accounting with Northeastern Illinois University. He has active involvement in several national franchise network, including the International Franchise Professional Group, FranServe, and the Franchise Brokers Association. This is giving him deep insight into the financial needs of the franchise owners and small businesses alike. With a career built on guiding entrepreneurs through the complexities of finance and business growth, Michael's approach is both strategic and practical. And in today's episode, we'll dive into his journey, explore the essential tax planning strategies, and discuss how entrepreneurs can structure their businesses for maximum profitability and long-term sustainability. So if you're a business owner or thinking about becoming one, this episode is packed with insights on how to avoid costly mistakes, maximize your profits, and set up yourself for long-term success. So Michael, thank you for joining us today. I'm excited to have you here.
David, it's great to be here. Thank you for having me.
Absolutely. So let's get started with our first question. Tell us how you got started with your journey, what got you into accounting, and what made you focus on small businesses and franchise owners.
Yeah, thank you, David. It's a great story, actually. So I settled on accounting because it was practical, right? So here we are, everyone. So everyone who's listening to this right now, David and I are recording this on February 26th of 2025. So here we are in February of 2025. I'm 38 years old. You have more hair than me, David. So I'm jealous of you. I owned a firm that hired me out of college. I'm 38 years old. I've been in public practice as a CPA for 14 plus years. I owned the firm that hired me out of college. When I was in college, it took me 5 years. I'm originally from Chicago. I still have an office in Chicago. You know, I'm a huge Chicago Bulls and Chicago White Sox and Chicago Bears fan. I hate the Cubs. So for all of my Cubs fans, I'm sorry. I love Wrigley Field though. But
yes.
It took me 5 years to graduate college. I went to Indiana University, Bloomington. And I finished up at a local community college called Oakton Community College. Then I got my undergraduate at Northeastern Illinois University. Shout out to the Golden Eagles.
All right.
Golden Eagles, let's go. Like people think of Northeastern, they think of like the Northeastern in Boston. I'm like, no, right. Northeastern Illinois. And shout out to Northeastern. Right, exactly. Golden Eagles. So I graduated high school in 2005. And so I went to Indiana University, Bloomington. I had a lot of fun down there. I was a physical therapy major at one time. I was a journalism major. I was just undecided. I wasn't passionate about it. I was having too much fun, and we were paying my parents were paying out of state tuition. So I felt guilty because I wasn't taking it seriously enough. And it was, it was expensive. So I decided in 2007, I decided to finish up, I've got some general classes at the community college. And then here I am. It's like I'm approaching, I got to graduate, right? And so I just settled on accounting because it was practical. So I just got an accounting degree from Northeastern Illinois University. I got the degree in 2010. And right around that time, my dad reconnected with an old friend of his that they grew up together in the north side of Chicago back in like the 1950s and the early 1960s. And they lost touch for all these years. And they, coincidentally reconnected in 2010 through a mutual friend after decades of losing touch. That's right in 2010, right when I graduated Northeastern with a degree in accounting. In the conversation with the two of them, oh, so what's going on? Oh, my son's about to graduate, getting a degree in accounting. Oh, my brother has a CPA firm out in the western suburbs. They should connect. So I connected with the gentleman. I ended up working for him. And for those early years, 2010, 2011, I self-studied for the CPA exam. Just while I would work during the day, I would self-study during the night. And then I went very slow. I never failed any component of the exam, but I took like 3 to 4 months for each one, just so I made sure that like I put in enough to like, not fail. So it took me like about a year and a half to pass all 4 components of the exam because I took my sweet time. I self-studied for the CPA exam, and then I got my CPA, and then things just kind of happened. I think that I have strong leadership characteristics, which is evident going all the way back to when I was in school, like grade school. 3-sport athlete in high school, was always like the captain of the team, not because I was the best athlete, just because I was a good leader and showed up every day. Next thing you know, I become a minority partner in the business in 2015. And then I purchased the business outright in 2019. And then here we are in 2025, everyone. And so what happened was in 2014, how I developed this niche as a CPA for franchise businesses, me and the gentleman who was the majority partner at the time, but I since bought him out, acquired a small book of business of another CPA who unfortunately was dying of prostate cancer at the time. And he didn't have an exit strategy. And so we got connected to him through a mutual contact. And so we ended up taking over, like we bought his book of business. He ended up, like we bought his book of business, like we joined, we made the deal in December of 2013. We worked with his clients through that tax season, January through April of 2014, doing 2013's taxes. And then he ended up passing away in May of 2014.
Wow.
But because we made that, his widow was able to get a payout over a period of time, whereas she would have gotten nothing if that deal wasn't made. So in that book of business, one of the clients, he's still a client to this day, but he's retired now. But one of the clients in that book of business was a self-employed franchise consultant. And so at the time I'm doing his taxes, and I never heard of a franchise consultant before. So I didn't really know what that was. So I asked him, what is a franchise consultant? And he told me what he does to make money. How he would pretty much, he connects, he has like an inventory of like hundreds of franchisors, of vetted franchisors in all types of industries. And he introduces them to, candidates that he's working with that are looking to either invest in a franchise, either as an alternative to a corporate job, or as a investment diversification strategy to have as another income stream in addition to their corporate job. And so he introduces them to and then if they invest in the brand, then they have to pay a franchise fee. And then a portion of that franchise fee goes to the referring franchise consultant as a referral fee. And so I thought that was interesting. So I made myself available to him as I told him, I said, hey, if any of your candidates, as they're going through the franchise buying process, if they have any questions about entity structure strategy, funding strategy, coming at those two things from the angle of strategic tax, and then just any questions that they have about tax strategies for small business ownership, or any sort of questions about putting a financial projection together, like a pro forma, I'll be happy to talk with them. Give them my number, send an email intro, and I'll be happy to give them a free CPA consultation call to dive into these topics. If they want to work with my firm after that in a paid context, I can always have that conversation with them. And if not, no problem. He took me up on my offer. I did exactly just that with some of his candidates. It proved to be everyone involved got value, right? And like there was value delivered, right? I ended up working with those clients. So that I just started searching for other franchise networking with other franchise consultants on LinkedIn. And now here we are 10 plus years later, David, and I'm doing the exact same thing, just at a much larger scale. I now have, here we are in 2025, as you mentioned, I am the affiliate CPA of a handful of franchise referral networks. I have a nationwide network of franchise consultants that are not only part of those networks, but also some other ones that I'm not the official CPA referral affiliate of, but just a nationwide network of franchise consultants, and also now some franchisors that when they're working with prospective franchisees, they make me and my firm a normal part of their process to make sure they connect their franchise buying candidates to get education about these topics of entity structure strategy, funding strategy, tax strategy for small business ownership, because it's just a good thing to get education on for a new business owner, right? So that's what we do. We provide the free CPA consultation calls when they're going through the franchise buying process. And then if they want to work together, yeah, if they want to work together in a paid context, we can always, as you can imagine, we have a strong retention rate. A lot of them become clients of ours after they get those initial consults. But there's no expectation.
Fantastic. How you got started to the growth that you have, and share with us the growth. You mentioned that you have a couple offices, but we talked about this off the air, but share with us now the total number of people that's part of your team, where they're located.
Yes, absolutely. So we still have an office in the Chicago area. I have some team members that work out of there. I've relocated my primary residence for me and my family to the Portland, Maine area back in 2021. And big reason of that is just because COVID just changed a lot of things in terms of remote work. And we were already getting clients from all across the country. So being in Chicago became less and less of a thing. And we have about, as we record this audio today in February of 2025, we have about 40 team members. That's all professional, admin, bookkeeper, everything, all in top to bottom. Our admin team is incredible. Without them, they're like the offensive line. They do so much work. They don't get as much credit as they should. So I want to make sure I give them a plug here. About 40 all in. And we have offices. We have an office in Portland, Maine. We have a small office in Portland, Maine. We have a small office in Waterboro, Maine. I recently acquired another rock star tax professional. Her and her book of business have come into the reader team. It's been an absolute win-win. Waterboro is in southern Maine, southwest Maine. We have Waterboro office, Maine. We have Portland, Maine. We have Deerfield, Chicago suburbs. We have those offices, but we have team members not only in Maine and Chicago, but all across the country. We also have a few more other offices all across the country.
This coming fall, when the leaves are changing, the foliage, Maine is one of the great places. My girl and I, we might have to go up there and not only see the foliage, but maybe come and check you out too.
Come and check me out. Nice. Yes, sir. Let me know when you're here.
Come and visit. Absolutely.
Definitely.
Let's get back into this. Taxes can be a huge burden, especially to business owners and especially successful business owners. What are some of there's plenty of different ways to legally minimize the taxes that you owe, the tax bill that you owe. What are some of the most overlooked tax deductions that business owners should be taking advantage of, in your opinion?
First of all, it's really important for business owners to take their bookkeeping seriously. So a bookkeeping system is more than this thing that you do as like a rush job fire drill because you got to get your taxes filed by April 15th. Like so many business owners, just like they're always playing catch up with their bookkeeping. Take your bookkeeping seriously as a business owner, whether you're a solopreneur or a big business or anything in between, because the books are the foundation for any substantive tax planning conversation. First of all, it's going to streamline the tax preparation process. It's going to allow you to have a substantive conversation about cash flow and profitability, right? That's like a CFO conversation. And then also it's going to allow you to have a substantive conversation about tax planning, right? If you don't know where your numbers are, then how can you tax plan, right? So just number one, if you have your books, ducks in a row, so to speak, right? So you know where your numbers are. When you know where your numbers are, that's when you can start to have a substantive conversation about tax planning. So right out the gate, lots of small business owners, like one thing that doesn't get, that just is very important is one of the cool things about being a business owner. And I'm assuming cash basis right here, because a lot of the small side of small businesses, like they prepare their taxes on the cash basis, which means that you recognize income and expenses when the cash is paid and received, as opposed to when you send out an
invoice,
which is the accrual basis, the ability to accelerate subsequent year expenses in the current year. One of the cool things of being a business owner is the ability to control the recognition of expenses, to front load a bunch of expenses. If you had a big year, prepaying a bunch of next year expenses into the current year. That's a big one. Another one is taking full advantage of the accelerated depreciation of fixed assets, of vehicle, machinery, equipment, furniture, fixtures, leasehold improvements, all of that. What can you do to take advantage of all of the accelerated depreciation benefits that you have as a business owner? And again, we're in February of 2025. We're all keeping our finger on the pulse with what's going to happen with tax reform. It's all speculative right now, but there's a good chance that the bonus depreciation is going to come back and be much favorable like it was before the Inflation Reduction Act back in 2021. So there's that. Self-employed retirement plans is a big one, especially for high-income professional service providers, especially for high-income, like it's for all business owners, but the ones that really can save a bunch of money are like the solopreneur, like professional service provider, right? Like consultant, doctor, lawyer, realtor, that it gets paid as a 1099, but they run it through their S corporation and they don't really have any other employees. For that type of high income professional service provider, they get to a situation where they make a lot of money and they've written off everything and they still have a big profit. What can they do?
Right.
Self-employed retirement plan, right? Solo 401k or a SEP. Out of those two, I'm a fan of the solo 401k instead of a SEP. We can rabbit hole into that if you want, but then also, defined benefit plans, right? Pension plans,
absolutely.
Cash balance, defined benefit, those
profit sharing.
Profit sharing.
Yep.
Exactly. So
yep.
Right. Like, everything that like people think of like a self-employed retirement plan. They think of like solo 401k or SEP. And like, those are two up, but there's also all
more.
of more defined, define what we just mentioned right there, right? 401k, SEP, IRA, those are, simple. Those are defined contribution plans. But then there's this thing called defined benefit plans, right? Cash balance, like defined benefit, lots of big income. So again, right, it could
hundreds of thousands of dollars.
Hundreds of thousands
for the business owner. Absolutely.
Exactly.
And the employees can benefit from it as well, because that's a type of a retention with the plans, right? Most small businesses, in fact, any businesses now that are legitimate have a defined contribution plan, and for their well-behaved and well-deserved team members.
Correct. So that like self-employed retirement plans and the legitimate family business, right?
Sure.
Like finding justification to put your spouse on the payroll or your kids on the payroll. Lots of stuff that you can do there.
Absolutely.
So big, like when does it make sense for your single member LLC or your partnership LLC to be taxed as an S Corp to save money in self-employment taxes? That's a big one. At the end of the year, a lot of new clients that I get each year, there's always like the 10 or 20 that like we're doing S Corp elections because they were just a Schedule C LLC the whole time. And they're making like 100,000, like their net, is like 100, or I think that you should do it when you're like 40 or 50K and above. Like that's when the self-employment tax savings outweigh any additional costs of having to take payroll processing fees and stuff like that. Separate tax return, because now it's not a sole prop anymore. So when to S Corp to save money in self-employment taxes, that's a big one. Like there's the Augusta strategy, right? If you're a S Corp or C Corp or partnership, but your business can rent out the house for business use for 2 weeks out of the year. That's a little loophole there. Not loophole.
Absolutely.
It's something that's legit. There. It's legit. Right. And so people hear loophole and they think that like we're doing something wrong. It's just, it's a legitimate loophole that a lot of people don't know about. Roth conversions. So that's the thing. So I work a lot with new business. I work a lot, obviously, like then they become clients and then they're existing businesses year over year. But I also work with a lot of, new business owners. So leveraging that startup loss strategically, right? If you have a startup loss, are you able to like structure as a flow through so that startup loss can flow to the personal return and wipe out some W-2 income?
Sure.
Or do you want to, in the year of startup loss, is that a perfect year to do some to sell some capital, to sell some capital gains and have the loss, or
do some offset?
Yeah, do some Roth conversion offset, right? And then there's all of that. And then I know a lot about, more than your average CPA, I know a lot about this thing called the ROBS C-Corporation. Have you heard of that?
I have.
Yeah. So
please share with everybody. Yes.
Yeah. So ROBS C-Corporation. ROBS is an acronym for rollover as business startup. It's essentially a workaround the self-directed IRA. And I'm not saying it's not like I know a lot about it, but it makes sense in some situations and it doesn't make sense in some situations. And so, but it's a very popular option that people use in the business. So I consider myself a CPA in the business for sale marketplace, which means that new franchises for sale, franchise resales for sale, and also independent non-franchise resales for sale. Those so in that world, like, have you heard of Biz Buy Sell? Yeah. So Biz Buy Sell is the largest business for sale marketplace. And what you're going to find on Biz Buy Sell is resales of independent and franchise businesses. But then there's also new franchise territories. In the world of the business for sale marketplace, the ROBS is a popular structure because it pretty much allows you to use your retirement money to invest in your business. And like, and like you can roll over like, as much as you need to, tax and penalty free on that rollover. and you have to set up a C corporation, the actual shareholder of the C corporation is the retirement plan of the C corporation. And then like the retirement plan of the C corporation invests in the stock of the C corporation. So that's how step one. Yeah. So and it makes sense in some situations and it doesn't in others. The biggest drawback of it is that it forces you to be a C corp because the shareholder is the retirement plan. It can't be a flow through. It can't be an S corp because the shareholder is not David, the individual. It's the retirement plan is the shareholder. So it has to be a C corp. And so step one of the money flow is you roll the money over from your old IRA into the new C corp retirement plan, right? That's a qualified rollover from one pre-tax account to another pre-tax account.
Pre-tax, sure.
Yeah. And then step two of the money flow is going from the C Corp retirement plan. The C Corp retirement plan is going to invest in the stock. It's going to purchase the stock of the C Corp. So that's how the money is going to find itself in the C Corp checking account, right? Once it's in the C Corp checking account, now it can be used to fund the business investment and operations. And so it forces you to be in a C Corp. Exit strategy is not so simple. There's certain ROBS compliance things that apply to a ROBS C-Corp that are more restricted than a regular C-Corp. But anyways, so it's like, ROBS C-Corp makes a lot of sense in some situations. And so we dive into that. We get a lot of ROBS C-Corps.
So let's talk about this next one. One of the biggest decisions that businesses or business owners, when they choose to start a business, is the type of entity that they should set themselves on, whether it's LLC, an S Corp, C Corp, some of the stuff that you just talked about. Can you break down what factors should guide that decision? And
yes.
Under a couple of minutes.
Yep. So I have what's known as the 3 buckets methodology of entity structure and funding strategy.
Okay.
So before I advise on any type of entity structure or any type of funding strategy or whoever I talk to, I always get context on the following 3 buckets. Number one, what is their investment level?
Okay.
What is the allocation of assets on their personal financial statement?
Okay.
Right. And I'm looking for cash, other liquidity, retirement, real estate, right? Bucket 2. Bucket number 3 is household income and expense situation. Once I have those 3 buckets, right? Investment, assets, and income, they're all attached at the hip. Then I can approach entity structure and funding strategy from the angle of strategic tax planning. So I may talk, once I get context on those 3 buckets for candidate A, I might advise them to go LLC for entity structure and funding for SBA loan, and then back it up with reasoning and logic and all that stuff. Candidate B, I might, once I get context on the 3 buckets, I might go ROBS C-Corp for certain, back it up with reasoning and logic. So there's no such thing when it comes to entity structure and funding strategy. There's no such thing as painting everything with one broad brushstroke. Everything comes down to what is that person's investment level. And again, if they're starting a business from scratch, maybe their investment level is minimal, right? But what's the investment level? Bucket 1, bucket 2, assets on personal financial statement. Bucket 3, household income and expense. Once I have all that, then I can advise on optimal entity structure strategy and funding strategy.
Excellent. It's funny you talked about the 3 buckets. We also have 3 buckets as far as our investment philosophy as well. What are some of the creative and smart funding strategies that entrepreneurs can use to raise capital without putting themselves at financial risk, in your opinion?
So I will say that, and I say I think that the question is not framed correctly, because I think that you would agree with me, David. I think that there's always going to be some sort of risk in business ownership.
Absolutely.
Right? So, what can you do to structure with asset protection and setting up, have the
creditor
ISC
protection.
owned by a trust, exactly. So there's always some sort of risk, right?
Yeah.
But now I'm a big fan of the SBA program, because the SBA, if you're going to invest in a startup franchise, I like the SBA because you're going to have a much easier time getting an SBA loan as a startup franchise versus a startup independent business. So there's a use it or lose it dynamic to the SBA program. If you're a startup franchise business, because you're investing in a proven system, you'll have an easier time getting an SBA 7A loan, like a working capital and equipment loan as a startup franchise. So a big SBA fan for that. Also, I like SBA on SBA eligible business resales, because if you have if you're looking to buy a business and it's an existing business and its cash flow is sufficient enough to be SBA eligible, then you could potentially put only 10% down on it. It's like what I just mentioned on the startup franchise loan for SBA, be ready to put 20% down, maybe a little bit more if it's an emerging brand. If it's an SBA eligible resale, then potentially just 10% down, right? And then also and then any sort of like what's known as the SBA 504 program for real estate, if real estate's going to be part of the SBA, then you can only put 10% down on the real estate piece as well. So all of that. But then, we talked about the ROBS C-Corporation as another funding method that, we talked about the pros and cons there. Like what people don't talk about enough are like what else goes into retirement funding, retirement asset funding options, right? The ROBS C-Corporation is the most popular one. But then there's also for smaller investments there, if you just like, you can set up an LLC and you can get a 401k plan for your LLC. And then you can roll over your IRA of $100,000 into the 401k plan. Then you can do a $50,000 401k participant loan, tax and penalty free.
Perfect.
So that's another one that people don't, and then also, and I'm not saying that you're going to necessarily want to do this, but as you know, David, original contributions to a Roth IRA, right? Original contributions, you can take out tax and penalty free at any time.
Yeah, absolutely.
Conversions and earnings are different, but like original contributions to a Roth, you can take out at any time, right? And then also, when does it make sense to do a normal distribution from a retirement account and get hit with tax and potential tax and penalty, but offset that with the startup business loss, right? Sure. That's another thing. And then also securities-backed line of credit, right? Yeah, you have a non-retirement portfolio, right? And it's whatever, like, what's the general rule? It's like 40% or 50%. Like, it has to be a certain threshold.
So the stock market investments are typically 50% loan to value. And then things that are more conservative, like bonds, cash equivalent, they give a much higher loan to value.
Right. So
with 70, 80, the highest that I've seen, which is treasuries, is 90%. Treasuries,
right, because they're going to most likely retain their value.
That's right. Exactly.
Right. Exactly. So what's cool about that for everyone who's listening is that if you need to access that money for your business, you don't need to sell the security and face a capital gain event potentially and liquidate and lose the asset. You can leverage it. There's no hard inquiry. They just collateralize the portfolio and there's no underwriting process. It's just done. And the interest rate tends to be lower than like an SBA loan.
Yeah, because it's secured. Exactly.
So big fan of securities-backed lines of credit. I like home equity lines of credit.
Sure. Absolutely.
So yeah, exactly. So there's all of these things, right? ROBS C-Corp, everything that we just mentioned, these are all different options that go, and then sometimes good old fashioned cash, I personally am not a fan. Like it's like, my whole thing is this. I personally am very like, there's two mottos that I live by that I keep saying, that I practice in my own stuff. And then also like for the clients that I advise in. Strategic use of good debt, right? So it's like, if I'm going to take on debt, whether it's third-party SBA or conventional bank loan, or leverage my personal assets like a HELOC or a securities-backed line of credit or a 401k, that debt is good debt because it's being used to like invest in the business, which is going to produce a return greater than, right, the cost of the cost of the money, and then also all of the interest I can write off, right?
Absolutely.
Like,
yes,
personal credit card debt, you can't write that off.
Right.
Mortgage on your primary residence, you might not get any credit for it if you take the standard deduction instead of itemized. Strategic use of good debt, and then also using other people's money and preserve my nest egg, other people in the context of banks and SBA, and preserve my nest egg, right, as plan A, and then I can always leverage my nest egg as plan B if I need to. We all take on third-party debt when we're buying real estate. Why don't we do the same thing when we're starting our business if that third-party financing is available to us and the cost is reasonable?
Absolutely. Capital hierarchy. I got it. Perfect.
Yes, sir.
Many entrepreneurs get so focused on growing their business that they actually forget about their own personal financial wealth and their health. How do you recommend balancing reinvesting your business with building personal wealth and maintaining their health?
Great question. So I'll speak from my personal experience.
Okay.
I used to be really overweight. I used to eat a lot. I used to smoke a lot. I never like drank alcohol every day, but like I would drink alcohol like every weekend, right. And so, I know I'm in a very stressful industry. And
absolutely.
So that stress almost got the best of me where I only had 3. So I pretty much had 3. Like I said, I have 3. So it's like, this is a very passion subject for me because you can hear I'm talking fast, I'm intense and all that type of stuff. But like, make no mistake about it, everyone. I've figured out a routine that works for me. At 38 years old, I have a lot of energy. more than the average 38-year-old because of what I do in my day to day. So I say that because, first of all, like just like I was saying, there's no painting everything with one broad brushstroke when it comes to entity structure and funding strategy. It depends on like the 3 buckets, right?
Okay.
We all are wired, like we all are, like the composition of our body and our, like the way that our brains are wired, like it's all like what works for David may not work for me, and vice versa. And so you got to figure out what works for you. And so how do you stay optimized as a human being in today's world, right? So it's like, let's just start with it. No matter what you're doing, you have to get your sleep. You have to take your sleep seriously, because no sort of diet or exercise or anything, all like, you know, like you might have the strongest coffee from like, you know, the Brazilian rainforest, right? Or the Ethiopian, whatever.
Colombia.
And, from Colombia. And it's like, but if you're sleep deprived, it doesn't matter.
Yep.
So it's
Absolutely.
like sleep is the foundation. And it's just like, don't shortcut the sleep, like get selfish with your sleep. Right. But then, you know, I mean, you just like, I learned how to just, you know, get addicted to like healthy things. Right. So like my like I'm able to take on a lot of stress compared to the average bear just because of what I do in my day to day over the last 5 years. That's really, you know, changed me. Right. And like what I think I try to like, I think I'm an inspiration to some others just because I've heard some stories like, hey, Mike, I saw you on this, or like I took your advice here and like, it really changed my life. And it's like, whoa, that's pretty sweet. Like when you start to hear that. And so what do we do in this world? Like, first of all, we have to recognize that we live in a world that like our grandparents can't even really, you know, it's like with every, like we are surrounded by convenience and AI and
speed of everything.
And all these notifications. Like the phone is not a phone anymore. It's just like you have to find time to not only sleep, but also not always constantly be getting hit from a million different directions. For me, when I need to look at my phone and I don't want to get inundated with all these notifications, I have a second phone that just has YouTube, internet browser, Netflix, whatever. So here's what I do. I intermittent fast every day. For people that say, oh, Mike, the secret is to eat 5 or 6 or 7 small meals throughout the day. Doesn't work with me, because when I eat, I like to eat. I can't just eat like a little muffin and then be done. I want to have like 10 muffins. So like, what works for me is I've learned to just eat like a pig once a day instead of 3 times a day. I intermittent fast for 22 hours a day, and I eat a big dinner. I drink a ton of water. I drink black coffee, no sugar, no milk. So intermittent fasting. I also take cold showers. I roll out of bed. I take a cold shower, just straight cold shower. Like doing that cold shower, game changer. I go to the gym. I try to go every day, but I've been so busy. But I try to go like, you know, 3 or 4 times a week. I just do some light stretching, and then I do some weightlifting, upper, lower body. I don't do some crazy workout at the gym. I just do a moderate workout, but I stay consistent with it. And if I don't go every day, it's like not like I don't go 2 or 3 days. Intermittent fasting every day, cold showers every day, going to the gym at least, you know, 3 or 4 times a week, if not 7 days a week, getting my sleep, right? Getting my sleep. And yeah, I mean, like, so that's what works for me. So it's like, what works for David? You know, if you're listening to this right now, like what works for you? You have to like, just like entrepreneurs are always trial and erroring like stuff for their business, right? Like, you know, like it works or it doesn't work. If it doesn't work, then you keep trying until it works, right? Like, I don't think anyone on this planet has failed as much as Elon Musk, right? It's like failure is part of like, you fail and you learn, you fail and you learn, you fail and you learn. And then you keep moving it, right? Like micro failures in exchange for macro successes, right? And in doing that, you avoid like you want micro failures to learn from them for macro success to avoid macro failure. If you're struggling with your sleep, you're struggling with your stress, you're struggling with your weight, you're struggling with an addiction to this or an addiction to that, you're struggling with, you feel like your client as a business owner, but just there is a way, figure it out. You will figure it out. Give yourself some grace. Give yourself some grace. Try things that you hear from other people. See what works for you, what doesn't work for you. When you are feeling down, sit in it for a little bit, feel it, experience it, be in the moment, and then take steps to get out of that, right? Like physical, like we're human beings. We're not meant to sit around all day. We're supposed to do some sort of physical activity. We weren't meant to like sit at a screen all day. Walking, running, you know, weightlifting, whatever, standing desk instead of sitting desk, like whatever it is, like some sort of, you know, movement, even a monotonous task of like folding laundry or doing the dishes, like just some sort of movement gets the brain going. And like that, like, you know, like I feel a lot of my anxiety, like I get hit the worst with anxiety in the morning. I wake up and I just like, there's the thoughts, like everything going on with my, like the world, but I get up, I take a cold shower, and it's like, you know, Optimus Prime mode after that, like for the rest of the day. But then guess what? Then the next morning comes and I'm going to feel that anxiety again.
Yep.
And then so it's like, like
resilience by resetting.
Resilience is a muscle. You have to work it every day. Like you can have the greatest day, you can crush it. But guess what? Like for me, like that anxiety, that voice in my head, the next morning is going to come. And so you just got to keep working it every day, and to the point where it's just like, you observe the negative thoughts, like your ego or whatever, like you observe the negative thoughts in your brain and you can like observe them almost as like a third party. And like, you just know it's a part of you, but it doesn't control you. And then you just learn to just like accept that it's a part of you. You kind of like just ignore it. It's like the loud, yappity voice in the back, but it's sitting in the back in the corner over there. Don't let it control you. Don't let it drive the bus. It's sitting in the back of the bus.
Right.
But like what I do is take a cold shower. Like, for you listening out there, what do? Figure out a customized plan for you that works for you. And just know that you will figure it out.
Excellent. What do you see? You have obviously worked with many dozens, if not hundreds, of successful business owners. What do you see in terms of their financial habits that gives them that success versus those that struggle? So we're talking about successful business owners like yourself, and you've shared a lot of your own personal story to that. But what are some of the business owners that may struggle versus the business owners that have good habits that creates that successful ladder for them?
Yeah, I think that there's always exceptions to the rule. Like you have some people that are just geniuses and they can do nothing, but they can just click a few buttons and make $1 million on crypto. We have the super geniuses out there. The majority of us are not them. And so for the majority of people that I see that are wealthy, that are not the exception to the rule, that are not the super genius, there is a direct correlation between their day-to-day routines and their net worth. They wake up early. They stay consistent, like they time block, right? They crave mentorship. The more successful they get, the more that they're investing in coaching and mentoring, not the less. Yes, like they're craving, like the most successful people that I know are paying $10,000 or $20,000 a month in coaching. And then you're surrounding yourself with other high performers, and they just have very disciplined, like they've learned disciplines of self-control, whether it's waking up early, not doing drugs or alcohol, saying no more than the more money and success that you get, you have to say no more to things than yes to things. And the discipline to say no, the discipline to show up on time. And so they're just very disciplined in their day-to-day routine and their day-to-day habits, and they're disciplined in their self-control. Those people, because like in all of that, like they're craving mentorship, they crave learning, they're always learning. Those are the people that can get into like an 8-hour focus. Like if there's some problem with their business, they can clear the calendar. I'm a big Alex Hormozi fan. Shout out to Alex Hormozi.
Yes.
Yeah. And like one of the things that like he says that's really resonates with is like 95% of a business's problems can be solved with a good night's sleep, a clear calendar, and a strong cup of coffee. It's like whatever the big thing is that's like, eating at your business, just time block the whole day. Don't cancel it. Don't schedule any calls. Get a good night's sleep the night before. And maybe just you or like you and some of your leadership team members spend 8 hours doing nothing but talking about that problem and solutions for it, as opposed to like the 1 hour meeting and got to go to the next meeting. And we're all a slave to our calendar. And like people are focused, but they're not focused. It's like the ability to just get into an 8-hour focus in the year 2025, surrounded by all the distractions. Like the people that I see that are successful can do that. Can focus at a high performing level.
Fantastic. You obviously are very passionate about this. We can definitely hear this, and it definitely portrays that. Let's jump off a little bit on the habits. Let's talk about, what do you think, and we kind of cover this a little bit, changes in tax laws that business owners should keep an eye on for 2025 and the next couple of years? What do you think are the 1 or 2 items that are going to be very important to keep our eyes on?
What's going to happen to the bonus depreciation?
Absolutely.
Bonus depreciation is a big one. That to me, I mean,
that's huge.
Think that's huge, right? Because then it's like, and then are all the stuff from the 2018 Tax Cuts and Jobs Act, is that going to remain intact? Be the same, right? Cool. Is the QBI 20%? Is that going to stay intact? Is anything from the Tax Cuts and Jobs Act not only stay the same, but also get a little better? To wait and see, right? And so Social Security, what's going to happen with the taxation of Social Security income, what's going to happen with tips, like are tips going to be tax-free? Is Social Security going to be tax-free? Social Security income be tax-free? Tip income be tax-free? Just curious on those. And where are rates going to be? What's going to happen to the standard deduction? All the basic stuff. But for me, the biggest thing is what's going to happen with the bonus appreciation.
Bonus appreciation. Yeah.
Yeah, because that's such a big thing for like the self-employed people.
Absolutely. For listeners that are walking away from this episode with just one piece of financial advice, what would you give them?
Embrace a low cost of living lifestyle.
Don't live beyond your means.
No matter how much money you have in the bank, the material things are not going to find happiness in just like the people that you surround yourself with, your family, your spouse, your kids, that meal on Friday night. There's a reason why the Shabbat, why the Sabbath is this thing there was a reason why that was part of the rules that God,
the Jewish community,
Moses and stuff. And like the money is not going to buy happiness. So even if your net worth is 50 million, live a life of, cost of living of $200,000.
Fantastic. So Mike, where can people find you and learn more about you and your practice and your services? Where can they find you?
So my website, the name of my company is Reader CPA Group. That's Reader, R-E-E-D as in David, E-R, right? Reader CPA Group. Just Google it, readercpagroup.com. That's the website. We have a contact us section that you can fill out to get in touch with me and my team. My email is michael@readercpagroup.com.
Okay.
So you can reach out to me there. Yep.
Fantastic. And for those viewers, you will be able to see that at the bottom of your screen. And any final words?
Don't fall in love with money. Fall in love with making money.
Beautiful. I actually love that. Fantastic. Yes. I love it. Well, everybody, thank you for tuning in to this episode of the Jet Setting Wealth Advisory Podcast. A very special thank you, Mike Reader, for sharing your valuable insight on tax strategies and business growth. To connect with Mike, again, it's at the bottom of your screen with the website and his email address. I'm David Yu, active airline pilot, founder and wealth advisor of DTY Wealth Planning Solutions. If you found this podcast to be valuable in our conversation today, please don't forget to subscribe, leave a review, and share this episode and any other episodes that you find meaningful and useful with business owners and airline professionals so that they're able to continue to build their strength in their financial foundation. Until next time, stay the course, think strategically, and continue building your wealth with confidence and purpose. Goodbye, everybody.
49 faces looked to him in triumph. Over the last 12 months, they had each taken turns and promoted his business for a week at a time, driving over $987,342 in revenue. What if you had a network of 50 centers of influence who promoted your business every week for a year? Grab your copy of the #1 Amazon best-selling book, The Ultimate Guide to Growing Your Business with a Podcast, at 33% off the Amazon price by going to ultimatepodcastbook.com. Again, that website for 33% off the Amazon price is ultimatepodcastbook.com.